Welcome everybody to the Chinchilla Pickin' Podcast. It is June the 29th, 2025 at 4:07 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, the Baron of Bonds himself, Brandon Beaver.
What a weird week, man. Like it just so much happened that by the time Monday came around, everything that we said was out of date already last week.
Yeah, a lot of it, yes, but some of it, no. We were actually right on a lot of it.
Yeah.
But yes,
Yeah.
out of date. The news moves quick. It moves quick,
E-
but
Especially with a president that moves very quick.
yes,
Everything.
yes, 100%, yes, yeah. Everything is. The news comes out, it gets going, it gets out there, moves. Stocks are moving, prices are moving, everything's just flowing at a extremely fast rate nowadays with social media and the ability to get things out there with a stream of social networking sites like X and so on and so forth that just news clips, even if they're wrong, they have to get them out there immediately, and I hate that. But it is
Yeah,
what
I
it
agree.
is.
I agree.
Anywho, but there's something more important, Brandon. I want to talk about, and it's coming up this week. It's America's Day, America. It's July 4th, man. It's coming
Yeah.
up Friday in between podcasts. We got to say something about Independence Day, right?
Sure.
Right? I mean, happy Independence Day, America. Run out your Gadsden flags. Let's have a good time. Let's blow up some fireworks and grill some hot dogs, hamburgers, or what. I mean, most everybody goes to festivals nowadays, right?
Well, I mean, we used to set off fireworks ourselves back in the day, and I'm just lucky I have all 10 of my digits left.
I mean, I used to set off fireworks too, and that's what I grew up doing. And I as an adult, I did it a few years. I find myself now as older, I'm like, I don't have any grandkids yet. And so let me go sit somewhere and let somebody else do all the work. And I'll
Right.
just go
Right.
buy a hot dog or hamburger and watch some fireworks and go
Yeah,
home.
that gets expensive. It gets expensive. No, no, not what you're doing, but the actual setting off the fireworks yourself.
Yeah.
Oh man, that was a big yearly expense for a while.
It was fun. Don't get me
Yeah,
wrong. I had a
fun.
blast. Yeah. Yeah,
But
and
yeah,
we grill
I'm,
out at home anyways. You just could grill out and have a good time, and that was. I don't know. I mean, if you're listening right now, or you're watching this now on YouTube. I got to get used to this being on YouTube. Watch my mannerisms when you talk. But if you're watching this on YouTube or listen, I mean, let us know. DM us. Let us know what you do for July 4th. What's your traditions, if you will?
don't tell
What's
me I
something
don't
to
care.
do? Your family's from the
Oh,
South, though.
damn
I
me.
mean, like you guys got to be like deep in the fireworks and grilling out,
Oh
right?
yeah, it was a big deal for a long time. But then my mom put the kibosh on it, I think. I think she's the one that put the end to that because it was it was a lot of money for my parents every week.
Gotcha.
Every year.
Gotcha.
Yeah.
See, it was most of my family on my dad's side native, still live near the reservation. I mean, it just kind of like you get more not country as in like West Virginia, Kentucky country. Talking country as like we just live out peacefully by ourselves type country people. I
Yeah.
don't know.
Good time.
Maybe that is that. Maybe I'm wrong. Maybe that is that, and
I don't know.
I have it wrong in my head. The stereotypes. Who knows?
Who knows?
Anyways, America. Run out
America.
your Gadsden flags. Let's have some fun.
America.
Yes, there's the Fed news that was all over. I couldn't turn on Bloomberg, Cheddar, CNBC, Fox Business, any business stock news channel, and not hear someone within 5 minutes, Brandon, mention the Fed and rate cuts and the Fed chairman and Jerome Powell and Trump, and I was just getting sick of it. I'm like, guys, there's more to the market right now than this.
Yeah. So the only reason why I'm even paying a little bit of attention to that is because I own Newmont Corporation, and I think interest rates can't go higher. Maybe on short-term interest rates or on bonds and stuff like that, they might jump on fears when something happens, but the Federal Reserve's not going to raise interest rates. They can only go down from here. The
Yeah,
question
but
is,
when? And that's the question, when, right?
it's when and how long fast they're going to do it and how much they're going to do it this year. But it's still a good setup for Newmont Corporation and gold miners and gold itself, I think. Um, Government spending is not slowing down. It's not. I mean, we
No.
the big beautiful bill that's gonna pass. So you
They
got
changed
government
it a lot. The
spending.
Senate has changed that bill. I knew most of what was in it when it first got to the House. Now it's been changed so much, Brandon. I don't know really what's in it anymore.
Just know it's a lot. So there's a lot of money going to be added. There's still going to be a devaluation of the dollar. There's good pressures on inflation, which is awesome. But I think that the gold setup is good. I think the Newmont Corporation. I read that they're poised for growth as long as gold remains above 2,000 an ounce, and we're like above 3,000 an ounce right now. So they're in a good setup. So
You're happy.
yeah, I'm happy with that. And
You're happy with your investments
yeah,
because of it. I get it. I
right.
get it. All right. Well, how about we move into the show? I
Well,
know you
let
have
me
a.
ask you this question, Dave. Are
Go
you going
ahead.
to sell Microsoft Corporation if the Federal Reserve doesn't lower interest rates?
No,
No, me either. This is just all overplayed. It's all overplayed. They're trying to find drama and a slow news cycle.
I would probably if the GDP turns negative and consumer income, like average income, goes down,
Right.
and the Federal Reserve doesn't lower rates, you could probably sell some home builders.
Yeah.
You can
I
make a
agree.
case for that. A case for it. How about that?
Right. Right. I agree on that.
There you go. But there's a lot of ifs in that statement, so it's like I'm not going to consider worry about that.
Right.
All right, here we go. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the lie back and forth, the bicker and the banter right here on the show for you. Brandon, back to the usual format. Take us away.
Okay. All right. I didn't know I was going to go first, but it's cool. I'll do it. It's probably a better idea. I tend to talk long anyway. So,
You have better information, is what it is, and you are more detailed.
yeah. Yeah. I'm very detailed. Um, Nike reported earnings. So, I mean, who would have guessed? Who would have had it on their bingo card that Nike was going to be the best performing Dow stock and S&P 500 stock of the last 7 days? Not me.
Not me.
Not me.
You sure the best S&P? I bet you I could find one better.
Yeah, I think it was the best S&P 500 stock. It was up at 18% over the course of 2 days.
I'm gonna check that number right now. But go ahead,
Okay.
continue.
So you may wonder why the stock erupted the way that it did. I'm going to go into the earnings here. The earnings were mixed. They beat expectations, but they weren't great. But there's a few reasons as to why the stock took off, and I want to tell you what my conclusion in on this is at the end of this, and if I would buy it. I already own it, but if I would buy it now at this point. And I want to go into what I look at as far as turnaround plays go. Because I've had some rather successful ones. I had a failure in Boeing that didn't last very long in my portfolio, and I made like $1 out of it. But, I would count Meta was a turnaround play because I bought it when nobody liked it. And then they had to have that rather successful year of efficiency to get back on track. GE Vernova, GE Aerospace, all the GE companies, those were turnaround plays. I'm looking at Disney right now, still hold Disney. That's still a story in play. So, what do I look for when it comes to these turnarounds? And I'll get into that here too. But first, let's talk about why Nike is in the position that it's in and what led us to this point. So, for years, Nike has experienced declining revenues and a notable erosion of its profit margins, culminating in its shares trading at a 10-year low just a couple of weeks ago. It's been a very, very hard downturn on all fronts. Several key factors show this. Sales in Greater China, historically a vital market for Nike, plummeted 21% last quarter, actually, in 2025. That's a region that accounts for 20% of the company's total revenue. Nike reported an earnings per share of 14 cents on revenue of $11.1 billion dollars. That exceeded consensus estimates of 12 cents a share and 10.7 billion on the top line, respectively. But quarterly revenues have decreased 12% year over year. EPS plummeted by 86% year over year. So go ahead, Dave.
Is this all due to the running mainly, the running aspect of Nike's business, or like it's
No,
because I know the sneakerheads loved Nike. So you're
right.
talking about actual athletic shoes, correct?
Yeah, so they had a lot of self-inflicted wounds where they stopped focusing on the running category. I'll give you one major issue that they had, for example, going into 2020, when the COVID decline set in and we started locking down everything, Nike ceased ordering stuff. They just stopped ordering things. And so what happened, right? Everybody had to stay home and they were getting these COVID paychecks and they were going out and saying, well, the only thing I could do is go outside and do activities like run or play basketball. So a lot of people started buying shoes and Nike was not prepared for that because they stopped ordering stuff. And that's just one thing that they did. They stopped paying attention to their runners. They stopped showing up the running conventions. For example, we talked about Branson, Missouri's running conventions in the past where there were just no shows. Um, and they just stopped focusing on those things. And they also tried to do a bigger focus on digital sales and going direct instead of going wholesale, which was their entire business model in the past. They tried to shift that away. And what happened when we all stopped locking down and returned to COVID? We all wanted to go out and buy stuff. Nike wasn't there. So
Yeah,
a lot of
they were not
self-inflicted,
there.
yeah, a lot of self-inflicted wounds as far as Nike goes. A lot of these the decline in earnings per share can be attributed to one-time issues, restructuring charges. For example, our drag on earnings per share right now, although the CEO said that like we've seen the worst of that, those headwinds are going to moderate in the future. And they have done some significant restructuring. One thing, though, in this return to in-store sales that I am concerned with is that this report shows a 26% decrease in digital sales.
Okay.
But they have not made up for that altogether in in-store sales. Wholesale sales were actually the one positive though. I will say that they were up 9%, but not enough to make up for that 26% decline in digital. And I want anybody that's listening to this to go to Nike.com and shop for adult male shoes because almost every one of them are out of stock. You can hardly find any adult male shoes. You're looking at like the Jordans and stuff, it's almost babies and women's
Is
completely.
it so? I got a couple questions here. I know you did your research. So I know you probably have answers to this.
Yes.
Is it more because of Nike has lower inventories that they ordered, or is it because of the whole resale business? People, sneakerheads coming in, buying it up, hoping to make a quick buck on reselling it on the market. And like Nike's making limited versions of everything, and that's how a lot of these people are making money, or is it truly like Nike's sales are just through the roof?
So, no, it's not Nike sales being through the roof. Otherwise, this quarterly report wouldn't have shown such a decline in revenue year over year. It is partly what you just said, but it's also a return to their wholesale business model where they're trying to sell in stores and trying to revitalize and reconnect with those old business partners that they'd lost touch with, quite frankly. So it's part of that too. There's also been a significant driver of trying to even out their inventory because after they didn't order anything for the pandemic, they ordered too much right after. They increased their orders, and then all of a sudden they had an inventory glut. So that's another thing I was watching for on this earnings report. How well are they managing that inventory? And they've used actually a lot of Nike pop-up stores and utilized their self-named stores, their own stores, Nike store, for example, for pretty successful price markdowns, which unfortunately dropped the profit margin. The gross profit margin was down about 444 basis points, down to 40%. But I honestly think that that was actually good news for the stock, the margin, because I think a lot of people were expecting the tariffs to hit a lot harder than they did. 16% of Nike imports into the United States come from China. So I think that they were expecting, and then there's a large portion from Vietnam too. So I think that they were expecting a bigger hit on gross margin because of that, and because of the markdowns. The fact that Nike was still able to land just above 40%, I think was actually a good surprise.
Now,
I I was fine with that.
yeah. Question in regards to the tariffs. You mentioned you said what, 16% of their volume from China?
16% is going to be $1 billion in extra costs.
How much of that's getting passed on to the consumer?
They are going to nothing right now, but they said that look for in the fall, they're going to have surgical price increases. It's also notable to say this that this earnings report came out on Thursday, and then, you know, the stock rose about 10% in the after hours, which was awesome. Loved that. But then it was another 6% the day after, 6 to 8%. So it's close to about 18% gain in 2 days. Part of the reason why it continued the momentum that second day is because Trump and China announced a framework for a trade deal, including those, what we were talking about prior to the show with the rare earth metals and such. So that $1 billion that they're talking about as far as tariff charges go, probably not going to be $1 billion. It'll probably be less than that. So,
So actually not as bad for Nike. So
yeah.
a tailwind compared to what we thought it was going to be.
Right. So this is another one of those stories that wasn't as bad as I thought it was going to be, and some people thought it was going to be, including tariffs.
I
So
still, I still, I'm sorry. I hate to cut you off here and interrupt you. I apologize for that. I still go back to when I was asking about new footwear, right, to work out in,
yeah,
and not one of the shoes was Nike. And I go to the gym 5 days a week, and I'm out at different fitness events throughout town right now, and I see a lot more people wearing a lot of other different brands than what it used to be. You see the On Clouds, the Hokas, all these new and upcoming brands. Everybody's got to have a brand that fits their particular belief even nowadays. You know,
yeah,
I'll see a lot of Pride shoes, and I'll see a number of Christian related brands, and then I'll see a number of this type of military related brands. And every brand, there's now a brand out there for everybody that's backed by a
yeah.
certain organization.
That's true, but there's been a lot of successful product launches just over the past 6 months that have kind of piqued my interest. I'll get into those here in just a minute too, but
Good. I'm glad you are, because I have questions about that.
and
How are they going
also
to compete now that the market's saturated with all these other
right.
good brands that people are loyal to?
One of the other things that I want people to look at when they go to Nike.com, other than the stock and inventory levels, and maybe even you go to footlocker.com to look at these things, because they have actually a larger selection than Nike.com does. Look at the uniqueness of the shoes now, because they are very unique. The new shoes that are being offered. Um, but I'll get into the strategies here in just a second too. Uh,
See, I don't buy my everyday shoes, sneakers, anymore. I have workout shoes, running shoes, walking shoes. I got my
this you're
cross training shoes,
you're playing into their strategy. I'm
but
gonna
none
get
of them are Nike,
ahead
and
of
I
me
don't
here.
have any. I'm like, I don't see a reason to buy Nike.
So let me okay, so you might in the future. Let's see if they can
All
do
right.
successful marketing and ad campaigns, and let's see what your opinion is after my little presentation here.
Go ahead. Sorry, I keep interrupting you. I apologize.
So no, you're fine. They did say that the fourth quarter represented the largest financial impact from their win now actions, which is their restructuring. They said that these results are in line with what they were expecting, but they're nowhere near where they want to be. And keep in mind, this is a fairly new CEO. I believe he took over in October last year, and it was somebody who I thought that I could trust. And so far, I think it's going in the right direction. Slowly, but that's to be anticipated with these situations. They have two different initiatives that they talked about on this earnings call and that they announced just a few months ago. First is Win Now, and second is Sport Offense. Win Now is sort of how they're going to save their bottom line and their profit margins and all of that stuff. Sport Offense is going to mostly focus on the top line, and that's going to be your revenue growth drivers. So when now, this actually was implemented in December. That's their immediate operational response to their market challenges that they have, focusing on five key areas: culture, product, marketing, marketplace, and what they call their ground game. Um, their biggest shift here is trying to strengthen and straighten back out their wholesale partnerships that were lost prior when they started going more digital and pulling away from brick and mortar. That's number one. And this is a significant reversal after years of prioritizing direct consumer. And this has actually showed some early signs of promising growth. It was literally the one thing that I think people looked at and said, this, we could be seeing a bottom as far as revenue declines go. Wholesale revenue did rebound by 9% in the quarter. So that's good. Um, Another critical component of this win now strategy is cost discipline. So Nike has implemented substantial cost reduction plans. They achieved $3.2 billion in operating overhead cuts in the past year. That resulted in a 7% decrease in operating overhead for the full fiscal year. So that was another positive step in the right direction. They have had leadership restructuring. 11 of the direct reports under the CEO have been replaced. There's 15 of them, so there's only four of the originals left there. Another thing that they're trying to do is address the inventory glut. By the end of 2025, inventory stabilized at $7.5 billion. It's now flat year over year. That's good because it was increasing and going in the wrong direction. That's significant progress from previous peak levels. They're reducing their manufacturing share in China from 16% where it is right now, and they want to get that down to the end of fiscal year 2026. They're saying it's going to be the high single digits. So it's going to be almost a 10% decline.
Where's that going? Is that going to India, Vietnam, or
Vietnam.
Vietnam? Okay.
Yeah, which is another kind of issue for
I think
Nike
the
to bounce
Vietnam issue
back.
is going to be sorted out quickly.
Yeah, I think that's going to be a little bit better. So what you're looking at with the win now, that's addressing cost issues, cost pressures, margin, trying to keep that intact and buy them more time to get their revenue growth back on track. It's been 2 years of declining revenue, 2 straight years. So it's going to take some time. Well, you were talking about those, differing categories of shoes. That's what I'm about to get into right now. There's sport offense. That's concentrating on several key pillars. They want to make distinction within core sports categories. So when you go to their website right now, instead of the traditional men's, women's, toddlers, boys, you see running, basketball, training, custom shoes, and so on. Right. So they're now organizing their product categories by sport.
I like custom shoes. Did I hear you say that?
Yeah, I don't even know what that is. I was looking at the category on Nike.com earlier today and I couldn't figure out why it's called custom. You might be able to customize them. I don't know. But what that allows them to do is it allows them to focus on specific athletes, right? Like Luka Doncic or that runner from the Olympics. I think she's in the one that's trying to beat the 4 minute mile right now. Do you know what I'm talking about?
I do.
There's going to be a marketing thing on her from Nike telling
It
her
was
story.
all over social media recently.
Yeah. Yeah. So it's going to be telling specific product and athlete stories, which is what they used to do, by the way. They're going to go back to it, which is a good thing, I think. So the sport offense, concentrating on several key pillars, distinction within sports categories, building a comprehensive product portfolio, crafting compelling stories and marketing, in an attempt to more connect again with consumers and in the, elevating their market price. Um, that's showing promise. So running sales, for instance, grew by 16%. So that was good. They also have had a decent amount of successful product launches. For example, Aja Wilson, her WNBA collection sold out in 3 minutes.
Okay.
Yeah. So that, I mean, that was a good one. Now, Dave, for our listeners or viewers here on YouTube, I want to show you this one. Um, I got to pull it back up because apparently I lost it here. But Nike Air Max Snowfers.
Snowfer?
Yeah.
Is that like a loafer
It is
sneaker
a
loafer?
loafer sneaker. It is honestly, I am old. I must be old because this thing is already off the charts popular to the point where people are already setting their resale prices at $500. The This is so terrible to me. I don't understand it. I gotta find it though here. Um, so the retail price on this is gonna be $155. Let me share my screen here. If this will let me do it. Is there a share thing here, Dave? I'm losing my mind. Maybe I should have figured this out before we started the podcast, huh?
Right. That would have been good.
Here we are. I got it. Look at these things. Can you see? Are you seeing what I'm looking at?
Popping up. Yeah, that's ugly.
I know. Does that scream $500 to you?
No.
Apparently, they're super popular right
That
now
that screams
already.
$16 at Payless.
I know. Hasn't even been released yet, though. And they're already popping $500 on the resale value on them. I don't
Waste of
understand.
money. If nobody buys the resale, the people who buy this would have just lost out and they have to wear those shoes. Nobody buy the resale and just make everybody just suffer.
No, shut up, Dave. I own the stock. Everybody
No,
wants it.
sorry.
Fairplay is
Nike
terrible,
needs
but
to
go
be
spend your
punished for
money.
making something so ugly. That's just ugly. Maybe I'm just old and out of touch with style. That's fine. I'd rather be out of touch with
That's
style
it.
than wear that.
That's it. These are super awesome, and me and Dave are old and out of touch
Dave and I.
with the terrible product launch that is going to be these snowfers. That is actually really awesome. Go buy them.
No, they're not. Don't.
So
Disgusting.
yeah, I agree, but you look, they're popular. So I mean, it's one of those things I'm looking at, and I'm like, dude, if it makes money, I, I'll be
No.
fine.
There's lots of other shoe brands that are better.
But when you go to Nike.com, there's a lot of other better things on there than
I'll
that. But
check
I'm
out
just saying, it was,
Nike.com just because you're recommending me
yes,
to,
do it.
but I
We'll put
can't see
money.
myself buying anything. There's too many other brands of shoes that I would prefer to buy.
Okay. Okay. So shut up. I'm just kidding. I'm just messing with you. Um, I think that with this right now, I would love to buy it again if it goes back down into the 50s. It's $72 a share, so I don't think it's gonna. I think we saw a bottom. In the 60s, I think you buy it for sure. In the 70s, you adopt a wait and see approach, which is what I'm doing. I'm not selling it. I will say this, I did sell a few shares, but that was because the 18% increase gave it a market value in my portfolio higher than Google and GE Vernova. And I thought to myself, Nike doesn't belong there. So
No.
I sold a couple of shares to get rid of it. But
Did you buy Met Sarah with that money?
no.
That pharmaceutical company I told you about? No, of
Yeah,
course not. Why would you?
because it's pharma. I can't. It's not in my brain
Metsera's going to
power.
make lots of money, okay?
Okay.
What about that penny stock I recommended in our group chat?
I
Yeah,
don't.
if you're listening right now, I recommended a penny stock for the first time in years in our group chat, and nobody wanted to buy it.
I don't buy
Everybody
penny
was
stocks.
everybody's like, no, I don't do penny stocks. I don't do penny stocks. I'm like, guys, I'm just throwing a little bit of money in this. It's going to be fun.
Uh,
No, no, don't want to do it. And I said, JP Morgan just backed this company financially and didn't take a dime and took just stock shares as payment. And they can't sell for at least a year. I mean, come on. This
uh,
stock
but
is going up.
but that who knows why they did that? There's probably some other contracts in there that's made J.P. Morgan a better deal on it. Who knows? I don't know. I don't know what their reason it is.
To
I'm
me,
not
it
the
was a
person I
buy,
buy.
and it's gone up. It's gone up, man.
I,
I've made 50% return on my money.
did you sell? Or are you
No,
still holding it? Okay.
I'm holding.
Okay. So what am I looking for when it comes to Nike? This is what I dive into, what I'm seeing from my perspective when it comes to turnaround plays, right?
Okay.
Anytime you do a turnaround play, it can be a pain in the butt because these stocks have got to be monitored a lot more than the other stocks in your portfolio to make sure that these things are still on track because the uncertainty is higher. So what I want to see in quarter one of by quarter one of fiscal year 2026, I want to see a recovery of gross margins back up to 45%. That's what I'd like to see there. I want to see a China sales rebound because that's 20% of the business. By quarter one, fiscal year 2026, I'm saying this 10% sales rebound of revenue in China. I'd like to see it. Um, for holiday sales, 2026, strong performance of new premium products. I'm looking at the Vomero 18 and the Nike Skims line specifically because they're putting a lot of money into those. I want to see those pay off. I want to see inventory reduction, continue progress in that. I would prefer to see a reduction below $7 billion by mid 2026, but I'm not really holding to that 100%. Um, Narrowing revenue declines, I'd like to see um, low single digits, really, hopefully by the end of this year, as far as revenue declines go. Um, I also saw an interview on your favorite television show, Dave, CNBC.
That's a channel, not a show.
Whatever. Uh, I was watching this and it was reported by an Evercore ISI analyst that their future order book at Nike has went positive for the first time in 2 years. What a future order book is for a retailer is it's a metric that's used by apparel and footwear companies